Okay, a few words before we head in. 7:15 p.m. tonight. I will do another a live feed. That's 7:15 p.m. If you think better in terms of geography, that's New York time or Toronto time, and that is Sunday, January. What day are we today? January 5th, 2025. That is tonight. Understanding Bitcoin mining. I was really hoping that I would be done last week and have it up, but it's such a fast moving field. I have all the Bitcoin miners. I leave my name at investor relations. So you get all these news releases and they just keep coming. So I have to you read one, you go, okay, well, I got to put something like this in. I got to put that in. I got to talk about this. I'm about 50% narrated. My hope is that by the end of the afternoon today, I will be done the narration. But I don't think that I'll be done the narration for the 10K for Riot and for Mara. But the video itself should be done. January 15th, remember, applied level is splitting into two. One on analysis, one on asset management, and new pricing. That happens beginning January 15th. Okay, let's head in. Another shortened week behind us, and another shortened week ahead of us. This coming Thursday, equity markets are closed for the presidential funeral. Then we have a full week, and then we have a shortened week again on the Monday, Martin Luther King Day. Very next day, inauguration. And on the week after, we have the Fed. Let's see where we've been over the last week. As far as fixed income goes, not much to see here. Money market rates, very well behaved. Even capital market rates, we're not seeing a lot of activity in there either. The 3-month to the 2-year now has 6 basis points separating the two. Last week it was 4.31 and 4.31, implying a fairly large term premium. Term premium coming down, but I don't think too many rate cuts are still being priced into the 2-year. All the curves still upward sloping. Small change week over week in the curve, still holding pretty much the same shape. FOMC 24 days away on January 29th, and also Tesla earnings that day. The December minutes, the minutes from the December meeting, we get on Wednesday in 3 days. Probability of a 25 basis point cut inching up 0.5%, 11.2. Don't know why. I don't see 25 basis points unless we're thinking that, Trump calls Powell before the meeting and says, look, you got to give me a rate cut. Unless he does something like that. I still think this is where we're going to end up at 0 basis points, no cut. Jolts in 2 days, ADP in 3 days. We're off in 4 days, back with the jobs report, both sides of the border. In 5 days, Fed officials, at least 2 of them now, Daly and Kugler, have said this is the thing they're watching, is the jobs report. That's it right now. They feel that inflation is going to take care of itself. They're worried about the other side of the mandate, which is jobs. So let's see what those numbers tell us. ISM services in 2 days for the U.S., some Fed speak this week, Waller on Wednesday, and you have 4 on Thursday, Harker, Barkin, Schmidt, and Bowman. Reverse repo, $237 billion. For December 31st, if you looked at the chart, it shot up to like $480 billion, down to $237 billion. I expect next week will be lower. Reserves, this is a big surprise. Hanging out at the 3.2, 3.3 trillion level for a while, and a big drop to under 2.89 trillion. So the combination of the reverse repo and reserves less ample, 629 billion at 40 billion a month, 15.74 months. I expect we'll hear something about ending balance sheet runoff. Maybe not at this FOMC meeting, but the next one, maybe the conversation will begin. Maybe for January 29th in the minutes, we'll see that the conversation is beginning about ending runoff. TLT, small gain over the week, 0.23 week over week. SPY, small loss week over week, 0.48. Although with Friday's big rally, it didn't feel like it was a loss week over week, but it was. Fed funds futures still, not really wanting to show much more. Last week, I think, was 38 basis points in cuts, 1.5, sitting at 39.5, inching a little way towards being more optimistic, but still a far cry from the base case of 100, which I think would be a minimum. 1.5 cuts over 8 meetings with Trump feeling that he should have a say in things. I just don't see this as realistic. Before we get to beta, we're coming into an earnings season, and FactSet puts this out. This is the S&P 500 negative EPS guidance. You can see the jump up here to 71, but I mean, it's been elevated for quite some time, and the market just keeps going in one direction, so I don't know what to read into that. If we're looking for where the big differences are, information technology, this is the negative versus previous quarter. Consumer discretionary, negative versus previous quarter, and materials, negative guidance versus previous quarter. This is positive EPS guidance, only 35, so that's a big drop down. So an increase in the negative guidance, a decrease in the positive guidance. You did have a lot of positive guidance over here along with negative guidance. Now we're dropping down. We're looking for where the biggest drop in positive guidance is. Consumer discretionary, which lines up over here, that had the significant increase in negative guidance and a large decrease in positive guidance, and materials, which matches up with materials over here. For information technology, you have a small drop, I think 1 of positive guidance with an increase in negative guidance, but consumer discretionary is consistent across these two, and materials is consistent across these two, probably suggesting that we should look for some weakness in those two sectors, consumer discretionary and materials. Moving over to beta now, S&P 500. Forward 4-quarter operating earnings, LSEGs 272, SP Global 271. Closing SPX 59.42 puts it at 21.85 times forward earnings, down out of the 22s. Increase in implied volatility on SPY on a percentile basis, decrease on TLT. All-time high still for SPY at 607 on December 6th, sitting 2.61% below that. I don't know that we're going to see new highs until well into the earnings season, at least through technology. Not much going on this week because of the funeral. Next week, banks, followed by regional banks into the end of the week. The week after, technology. That's where I think you'll start to see some kind of sentiment on which direction the market wants to go. IWM 224, up 0.917 week over week. IJR, S&P small caps up 0.371, which beats the S&P 500 performance. IWM is sitting 7.5% below its all-time high. IJR 8.3% below its all-time high. For earnings this week, all three, LSEG, Sector Spider, and SP Global, all agree that on January 10th, Constellation Brands, Delta, and Walgreens Boots will report. There were 4, and then at least last week there were 4. Thursday, the markets are closed, which we didn't know last week they would be closed, and then it dropped to 3, and all 3 agree that there are 3 reporting for the 10th. The 9th, that is the Thursday, the market is closed. Implied volatility, last reading for SPY 13.1, up from 12.1, and for TLT 14%, down from 15.9, still with higher implied volatility than equity market. For open interest, on put call ratio, open interest 2.16, down from 2.24 for SPY, and 0.62, down from 0.64 for TLT. I don't know why anybody would be buying puts on TLT at this low level right now. I think you'd be more apt to buy calls or sell puts. Whereas with SPY, I think, 2.16 puts for every one call. There's still some concern, still some put buying on there. Not much to say about duration and beta, because we've had 2 shortened weeks in a row, and we're going into another shortened week. So I don't know that we're back in the full mode yet, but we should be by Monday, Tuesday, Wednesday, because next Thursday was a surprise. So I think everybody is back from the Christmas and New Year's vacation, so we should start to see some specific direction and tone and narrative to the market next week. And right now it is all narrative until we get earnings, and until, even with earnings, even if they're questionable, we still have the Trump narrative, the first 100 days, what's going to happen. So January 21st, the day after Martin Luther King Day, the first day that the market is open. On the Tuesday, you have inauguration. You'll have his speech, see what he has to say in that. And then I think you'll have, you better be subscribed to Truth Social on this one. I think you'll have policy by tweet. Is that if you are a member of Truth Social, you'll get the news before everyone else gets the news. He has an opportunity here to really drive subscriber growth. I wonder what would happen if he decided to charge $1 a month if you wanted to get his policy tweets. If he charged $1 a month with, I don't know, 30-40 million people following, $30-40 million a month. They did what, 5 million the previous year on just advertising, right? That's where the money is. I wonder if he can monetize government policy, the news feed for government policy. Wouldn't that be something, right? Okay, with sort of a lack of good economic data over the last couple of weeks, there's not much to dive into or talk to. Last week I had a section up on what I thought were the big trends, or the big themes for 2025. Here I've got some general thoughts because I have nothing else. I thought, well, this is a rather short week. I was looking for a theme for this week, looking all over the news, saying, there's nothing here, there's nothing there, there's nothing to talk about here, nothing big enough. A whole bunch of little bits of things here and there, so I thought I'd throw them together. I've got 4 of them here: Tesla, USD, cybersecurity, and Bitcoin. For Tesla, I would love to go short this thing, but it's so difficult to short this thing. It is a cult stock. Missed in deliveries, and they took a big dump on that, proving, or at least demonstrating, that they are still a car company. And then the next day they shrugged off, saying, no, we're not a car company. We're not a car company. 495,000 deliveries in Q4. Puts them at 1.789 million for 2024. Shrinking car company here. They did 1.809 million in 2023. EV credits are probably going to be gone. Johnson, the Speaker of the House, got elected on the first round. In his speech, we will end the EV mandate. So I wonder if the offset credits that Tesla generates are at risk as well. Will other companies that emit CO2 or other things have to continue to buy the energy credits, or the offset? I forget what they're called. The regulatory credits from Tesla. Because if you add all those up, that's pretty much where all their profit has come from, are from the credits. That'd be interesting. Earnings January 29th, Fed date. Looking at BYD, they delivered over 500,000 in December alone. This was 500,000 in Q4. This is 500,000 in December alone. I read 2 reviews, one from Barron's and one from I forget who it was, on FSD release 13.2. Both of them say significant improvements from the previous versions, but still they cannot recommend it because it still requires too many interventions. Much fewer interventions than all the other ones. That there are some neat little features that it's gotten much better on, but it's 100%. Both said 100% alertness, and you will have to intervene though not as much as you used to. So I don't see quarter two FSD, full FSD. I don't see it. End of year robo taxi. I don't see it. I just don't see it. I would like to short this thing, but it's brutally hard to short. You have Musk, which is kind of upsetting Germany at this point. Musk, which stands in between Trump and China. And Trump, I think, getting a little tired of being mocked as being a co-president, or did you check with Musk before you did this? The media knows exactly, at least the left-wing media knows exactly how to taunt him by calling him a co-president and, suggesting that he should check with Elon Musk before he makes decisions. And Trump does not share the stage. I think that falling out is something that you can predict. There will be some distance that Trump will put between them. I'd like to short this thing, but it just doesn't work out. Fundamentally, it's a short. Psychologically, you can't do it. U.S. dollar. Debt outside, external debt. This is other countries that issue U.S. dollar denominated debt. 7.9 trillion outside the U.S. Most of that's going to roll over at maturity, which will keep the demand for U.S. dollars rather high. With interest rates expected to be high, you would expect that there would be some strain in some of these countries that have external debt. I don't have a listing or a ranking on which countries are facing renewals in 2025, or which countries have the most. Tariffs are going to hurt other countries because if you're importing to the U.S. and a tariff gets put on you, you're going to hurt. Your economy is not going to do well, which just bolsters the U.S. dollar. Have a look at Canada and Mexico, the currencies of those two countries dropping significantly. Canada sitting at 144. And with, I don't think, any real plan going forward. The Liberal Party wants Trudeau gone. Mark Carney is already calling Liberal MPs and shoring up support for his run for the leadership. And Trudeau is just not going anywhere. I mean, have you no shame? I mean, what is it going to take for you to get the message? You have somebody else who's already calling MPs, and saying, look, will you support me? They're not even waiting for the kid to resign anymore. They're already moving ahead. Based on where we are, I see much more pain. We could see 150, and maybe we might even hit the record lows, getting into 160. But I don't see where we're going to get the strength for the Canadian dollar at this point, unless you have the U.S. dollar, the strength of the U.S. dollar simply just give up. I don't see that happening in the near term. Maybe in the latter half of the year, but in the near term, I'm just not seeing it. So I've been eyeballing gold again, thinking that now's the time to start nibbling at gold. But I think there's sideways movement in that for a while, as long as you have a strong U.S. dollar. And crypto also supports a strong U.S. dollar because it helps circumvent capital controls. So the more acceptance you have of this in markets where you would have capital controls. A capital control would be you have a local currency and you cannot change it to the US dollar. But what you can do is you can change it to a crypto. You can go online, change it to a crypto if you can. And by de facto, you have something that is tied to the US dollar, so you can actually get it out there. Stable coins are just going to make that sort of thing worse, which will just strengthen the US dollar even more. So with the new head of the SEC coming in, who's crypto friendly, with Trump, who owes the crypto crowd something for his re-election, maybe there's something there. So it's hard to see where we're going to get US dollar weakness in the near term. So there are some interesting trades that would rely on US dollar weakness, primarily commodities. Because commodities are priced in US dollars. If the US weakens, those commodities which are priced in US dollars would go up in US dollars just to be equal in other currencies, just to be unchanged in other currencies. They would have to go up in US dollar value. For US producers, that's good because it just means more US dollars. So Newmont, Freeport, the miners would do fairly well with that. I still think the commodity might eke out some gains, but the big gains for commodities are going to be with a weakening US dollar. I don't see a pathway to that in the next 4 to 8 weeks at this point. So, if you are thinking about making a trade on a weaker US dollar, I think patience is probably going to be the name of that game. I wouldn't look for a turnover very quickly. Cybersecurity, I've recently, if you have the applied level with positions, you know that I've recently started selling puts again on two of, I think, I wouldn't call them my favorite, but top of the list cybersecurity stocks. With tariffs coming in, with Trump threatening China with 60% across the board, I don't know that China would pull back on state-sponsored cybersecurity attacks. I think those would more likely increase in 2025. Cyber attack risk under Trump, I think, will escalate. State actors plus AI allows bad actors to write malware in minutes, not hours or days, but minutes. So if you're producing AI tools, good guys and bad guys can use them. I shouldn't do that anymore, right? Let's include women in there. Bad women can use it too. Let's be inclusive. Criminals can be women. Bitcoin. Let's move over to that. My thoughts here. A strategic reserve, I think, is going to be unlikely. I don't think you're going to hear anything about that in the first 100 days. Where are you going to get the money to buy 1 million coins at 100,000 a piece, right? You're throwing 3 more zeros behind that. Where are you going to get the money to get that done? I just don't see it. I think what he may do is all the seized coins, we're not going to sell them. Maybe he'll just say, okay, well, we got all these companies that are holding Bitcoin and not selling them now. We'll do the same thing. Here's my gift to you. Here's what I'll do to you. I won't dump these on the market. We won't sell them. But I'm just seeing it hard to get all the votes that you're going to need to get that done, to build a strategic reserve in what is right now still for 90% of the population, 95%, just an imaginary thing. Right? It's like the large part of the population still thinks it's just a made-up imaginary thing of zeros and ones that whether they're right or wrong, remains to be seen. We have the early adopters that are in. Is going to make a jump to mass market. Right now, there isn't a use case that suggests that would be the case. I think the future of blockchain is permissioned, not permissionless. And permissioned, you don't need a native currency. I think Bitcoin, I think most of those cryptos will disappear, completely disappear. And in time, Bitcoin may become a sort of a collector for hobbyists. But I don't see it having significant traction. The worst thing that can happen is that there is some significant success on Bitcoin, because governments will not compete on their monopoly position on their currency. They're not going to do it. They're not going to do it. The idea that there'll be this new global regime, I think, is foolhardy. If we think about it as well, it's just another alternative investment, a store of value asset. Not without a use case, not without some strong use case behind it. I mean, to create something only for its own existence, there must be some kind of use case behind it, and it's just not significant enough at this point. So I think a strategic reserve is unlikely at this point. MicroStrategy, a couple weeks ago, said we want to raise 10 billion have our common share issuance increase to 10 billion. I think it was 10 billion, or was it 100 billion? It was something ridiculous. And 1 billion in preferred. That didn't do much to their stock. It actually sort of hurt. So just this past week, they said, let's issue 2 billion US dollars, 2 billion in perpetual preferreds. Perpetual preferreds, that's if you have to pay a dividend on it, they can't afford it, so there'll be no dividend. If there is, it won't be cumulative, it'll be non-cumulative. It's more likely to be convertible than anything, which leads me to, what about the convertible bonds? You were going to do 21 billion and 21 billion on debt and equity. You're nowhere near the 21 billion on the debt. Why are we looking at perpetual? Why are we looking at preferreds all of a sudden and not looking at another convertible bond issue? Sort of makes me think that maybe the appetite for more convertible debt isn't there, and that they're running out of options, which might mean that this game they're playing is near the end. On what they're doing, because when you see all of these changes, not so much changes in strategy, but this lack of a coherent strategy. Let's do 21 and 21 over 3 years, and let's really spend the equity really fast, but nowhere near the level of debt. And then let's just say that we want to increase this, and then let's just move to this over here. It just seems like they're all over the place, trying their best to give the stock as much of a boost as they possibly can, so that they can sell more shares into the upswing. I just don't see why, with an increasing amount of Bitcoin and a money-losing business behind it, this should trade more than its net asset value. It really is little more than an active ETF with leverage risk. It's not the leverage isn't. I wouldn't say the leverage is a positive here. I'd say the leverage is a risk. So it should trade at its net asset value or at a slight discount to its net asset value, which would put it somewhere around 150, 160. We're at 340. So that is something that I would watch. I do have a position on MicroStrategy, but I'm not playing direction so much as I'm playing volatility, even though you do have to be directional. I am benchmarking on that one. If you have the positions video from last Friday, you'll see what I'm trying to get done on that one. Those are my general thoughts right now. Tesla, I think it's interesting to watch, but you just can't short that thing, but I wish you could. US dollar, I see no weakness in it, so any trade that is premised on a weaker US dollar is either small little nibbles at it right now, or it's just on the sidelines waiting. Cybersecurity, I see no reason to wait. And Bitcoin, I think it stays strong till after inauguration, and then as each day passes, the market will get more and more impatient over the lack of, where's our strategic reserve? Where's the $1 million? Where's all of this coming from? And they'll have to settle with, okay, well, they're just not going to sell. I think that will crater the price for a little while. A lot of the euphoria and excitement will start to come out of the market. I'm live at 7:15 today. As I said at the on the opening screen, I'll be doing a live at 7:15. These are nice topics to talk about if you want to ask questions and dive into this a little bit more. But I will do the live at 7:15. I'll see you then.